All right, let's talk about the Fibonacci retracement tool. We all know it's a powerhouse, right? But what if I told you there's a way to make it even more reliable? In this explainer, we're going to give this all-star tool a championship-winning teammate to help you find those really high-probability trades. Think about it like this. Even the great Kobe Bryant needed Shaq to win those championships. Well, your star trading indicator, Fibonacci, it also needs a solid partner to confirm its signals. Trust me, relying on just one tool can be a lonely and often losing game. So yeah, let's dive into that lone star problem. In trading, just like in sports, trying to go it alone is a massive, massive risk. When you base your decisions on a single indicator, you're putting a ton of pressure on that one signal to be right every single time. And that's just not realistic. It's a super important question to ask yourself. Are you really seeing the whole picture by just relying on Fibonacci? Or are you kind of just hoping for a lucky shot? The reality is, even the absolute best tools have their blind spots. And this right here is the main challenge with Fibonacci. It can feel really subjective. You know the drill. You draw your lines, and suddenly you've got multiple potential entry points staring back at you. Which one is the right one? That uncertainty can lead to hesitation, or even worse, bad trades. We've all been there, for sure. So what's the solution? How do we take the guesswork out of it? Well, the answer is a powerful little concept called confluence. We need to find a reliable teammate for Fibonacci to create a setup with a much higher probability of success. Confluence is just a fancy word for when two or more different tools are all pointing to the exact same conclusion. It's kind of like getting a second opinion from another expert that confirms your initial idea. And in our case, that second opinion is going to come from one of the most fundamental concepts in all of trading, support and resistance. And the difference this makes is huge. Look, using Fibonacci by itself gives you a decent probability. It's good. But when you combine it with clear support and resistance levels, you go from a subjective guess to a clear, confirmed entry. You're literally stacking the odds in your favor. Okay, enough theory. Let's get practical and see exactly how this whole thing works on a real chart. We're going to walk through the step-by-step playbook for finding these amazing, high-probability confluence zones. So first things first, we need some context. On this daily chart of the US dollar versus the Swiss franc, you can see a really strong uptrend. I mean, the market's just consistently moving higher, right? A series of higher highs and higher lows. The plan is to join this trend, but the big question is, when's the best time to jump in? To get started, we've got to identify our swing low. This is just the significant bottom of the price move we want to analyze. In this example, it happened back on January 11th at a price of 1.0132. Next up, we find the peak of that move, our swing high. That's the significant top. Here, it's at 1.0899 on February 19th. These 2 points, the low and the high, these are going to be the anchors for our Fibonacci tool. Now for the fun part. We apply the tool, drawing it from that swing low all the way up to the swing high. And just like magic, our chart fills up with all the key Fibonacci retracement levels. These are all potential areas where the price might pull back before it decides to continue the uptrend. And this brings us right back to that core problem we talked about. We've got the 38.2% level, the 50.0%, the 61.8%. They all look like pretty good places to buy. So how in the world do we choose? How do we find the highest probability entry of them all? This is the aha moment. This is where it all clicks. We look back on the charts and we see what lines up. And would you look at that? The 50.0% Fibonacci level aligns perfectly with a previous very significant resistance level. That's a price ceiling the market struggled to break in the past. This, my friends, is the confluence we've been looking for. This is our high probability sweet spot. So what happened next? Well, the price pulled back and tested that exact 1.0510 level. And here's the beautiful part. That old resistance, that old ceiling, it became new support. It became a new floor. And it held firm. Price bounced right off of it and then continued the uptrend, eventually breaking past the old swing high. I mean, it's a picture-perfect trade, all confirmed by two separate powerful signals. So, we've seen that it works, but now let's dig into why it works, because understanding the market psychology behind this confluence is what's going to give you the real confidence to actually use this strategy in your own trading. You know, it really comes down to two simple things. First, those old support and resistance levels, they're like historical battlegrounds that traders remember. Tons of traders are watching these zones like a hawk. And second, a huge number of other traders also use Fibonacci. So when both of these groups see a reason to buy at the exact same price, it creates a massive amount of buying pressure. It becomes a self-fulfilling prophecy. So, after all this, what's the one thing you absolutely need to remember? Let's boil this entire strategy down into one simple, powerful, and actionable rule. Here it is, your new rule. Always, always look for confluence. Before you ever place a trade based on just one indicator, just stop and ask yourself, is there anything else that confirms this? Is there confluence here? Make this a non-negotiable part of your trading checklist. It will dramatically improve your odds. And that brings us to one final thought. Today we paired Fibonacci with support and resistance, but this concept of confluence is universal. So the real question for you to think about is, what other teammates, like moving averages, trend lines, candlestick patterns, could you pair with your favorite tools to create your own winning team?